It's the Fix California Hour on the John Phillips Show. Johnny's on vacation, so it's Randy Wang here. The phone number to join us is 800-222-5222, 1-800-222-5222. You can email us at johnnydon'tlikeshow@gmail.com and search for the John Phillips Show wherever you get your podcasts. I always appreciate when our listeners email us stories because while I am pretty much up to date on everything, when things break during the show, it can be very, very, very helpful. Cindy writes in at johnnydon'tlikeshow@gmail.com with a headline from the San Francisco Chronicle. California Fair Plan seeks largest home insurance rate hike in years. The California Fair Plan, which is supposed to be the insurer of last resort, but is seeing more and more people get on it every single year, despite all of Ricardo Lara's plans.
I'm very kind of sketchy.
Has filed for a massive rate hike starting next spring that would average out to about 35%. Some plans would go down. A lot of them, half of all customers would see their rates, which are already exorbitant. The Fair Plan is very expensive and barely covers anything. Half of all customers who are on the California Fair Plan would see an increase from 40 to 55%. How do you budget for this? How do you, one of the reasons, outside of many reasons, that people buy a home is because you assume it's going to be very easy to budget your life knowing that you have a fixed payment. Because of Prop 13, your property taxes really can't go up very much. As long as you have a fixed rate mortgage, then your mortgage payment is going to stay the same every month. And until recently, your home insurance, maybe it went up a couple dollars here, a couple dollars there, but for the most part, it was stable. How exactly do you budget for that monthly payment that you work on going up that much when it comes to home insurance? I'm seeing it in I'm not on the Fair Plan. I have farmers, and my homeowner's insurance has more than doubled in the last 2 years. It's getting to be ridiculous. And all the reforms that Ricardo Lara keeps promising are going to bring down the rates and bring more competition into the market are not doing that.
I'm very kind of sketchy.
Now, why is this happening? Well, a spokesperson for the Fair Plan says, now, thanks to Ricardo Lara's reforms, the Fair Plan can look at climate mapping and modeling and reinsurance risk as factors into jacking up your rates. And by the way, let me just clarify one thing because people do tend to get confused about this. Even though it's called the California Fair Plan, it is not a government plan. It is not the state government that is running the Fair Plan. It is something that was created by the legislature, but it is a consortium of the major insurance companies. And it was created because nobody wanted to insure any properties in Watts after the riots back in the 60s. And now it's become the tool that the insurance companies can use is if they don't want to write in a place that they say it's risky, then they put you on the Fair Plan, the insurer of last resort, charge you way more money for way worse coverage. Well, at the same time that we're seeing this potential rate hike increase up to the average of 38%, if Ricardo Lara approves it, what do you know? The people who were on the Fair Plan, some of them just recently on the Fair Plan, when the wildfires hit the Palisades and Malibu and Altadena, here we are almost 9 months later. And they're still in fights with the Fair Plan because the Fair Plan is trying to argue, even though they've already lost in court over this, that smoke damage is not fire damage. And it doesn't matter if your home is unlivable because of the smoke and the toxic chemicals in there. If it did not physically burn down, they don't feel that they should have to honor the contract. For more on this, we go to ABC 7 Eyewitness News in Los Angeles.
Many owners are still out of their homes months after the January fires, even though they weren't touched by flames. The smoldering legal battle that's erupting. As the saying goes, where there's smoke, there's fire, right? Well, not always. And that distinction has several homeowners ready to fight.
Some say they can't live in their homes. They say they're not getting the needed resources to fix that.
7 on your side, investigative report.
You know, for all the people that want to argue, one of the reasons that insurance rates are so high is because they get sued left and right. Well, is that a chicken or the egg theory? Is it that insurers are getting sued left and right just because that's what happens in litigious California? Or are insurers getting sued left and right, including the FAIR Plan and including State Farm, because they are not honoring their contracts?
7 on your side, investigative reporter Kevin Ozebek joins us to break down what they say this problem is. Kevin?
Well, Mark and Michelle, nearly 9 months now since the L.A. fires, and hundreds of homeowners say they still see no path to recovery.
You know, with all the talk of, this rebuilding is going so quickly, Karen Bass trying to always, in a very morbid way, compare the recovery effort of the Palisades to the recovery effort of Paradise, California, which is a really weird thing to do. But she keeps talking about it's the fastest recovery. In the meantime, here we are. We're 3 quarters out. The year's almost over. And how are any of these people supposed to rebuild when so many of them still haven't been made whole by the insurance company? I know this isn't something that Karen Bass has jurisdiction over, but it's something Gavin Newsom does, except Gavin Newsom and the legislature decided that we're better off if Ricardo Lara's in charge of all of this.
I'm very kind of sketchy.
So when this thing inevitably blows up, we can just blame it on him and his safari trips that you're paying for.
Many of those are on the California FAIR Plan, the insurer of last resort for fire coverage. They're especially frustrated. Some policyholders who still have homes, but they are damaged and contaminated by smoke, are seeing their claims denied. They feel the FAIR Plan is acting in bad faith.
And we've heard some of these stories where the FAIR Plan says, you'll have a private company test the toxicity of your home, and they'll say it's unlivable. There are dangerous chemicals that will give you cancer. And the FAIR Plan says, how about we give you $200 for a vacuum? That'll do it.
In part of the Palisades where so many lost it all to the flames,
Okay, if we're hearing that music, it's Sweeps Week.
In part of the Palisades where so many lost it all to the flames, Lily Caffey's house is still standing. But she'll only step inside if she suits up with head-to-toe PPE.
She will only walk into her home with a Breaking Bad-style hazmat suit.
And walking through this front door is like stepping back in time.
Seeing everything it still feels like it was yesterday.
Okay, I just got to point this out. This is a very important story, and I understand there's some very emotional things here. When you have your emotional music so loud that I can barely hear the homeowner tell her story, we've overdone it. There's a phrase that I learned in my first year in radio, and it's called gilding the lily. You don't need to gild the lily. The lily is pretty on its own. Stop overproducing your segments, people.
Seeing everything it still feels like it was yesterday.
But what were fresh flowers on January 7th now show their age. And unopened Christmas presents remind us these fires sparked right after the holidays. Lily isn't touching or taking anything.
You can see here where it shattered and all of the debris that came in.
And it's got to be so eerie to walk in your house after 9 months and everything has just been sitting there and festering. And even though you can't live there, you're still probably paying that mortgage. You're still probably paying those property taxes, and you're still paying the FAIR Plan for a plan that they will not honor.
And that's because she says toxic ash from the fire blew in. Testing her attorney paid for shows just here in the living room, the smoke impact is severe, with elevated levels of mercury, arsenic, and chromium. So Lily believes nearly everything, including her favorite photo of her and her mom she shares this house with, is a loss. But in June, the California Fair Plan sent them this letter saying the field adjuster did not observe any permanent damage resulting from smoke, ash, or soot to the interior of your home.
It's almost like, unlike the other insurance companies that I guess have to deal with some kind of a public profile and they don't want to look bad, although that hasn't stopped State Farm from doing the same thing that the Fair Plan is doing, because the Fair Plan is this faceless consortium of insurance companies that is your insurer of last resort. Customer service doesn't really matter.
It just feels, for lack of a better word, disrespectful.
So Lily and her mom hired attorney Derek Shakin. He's fighting to get the Fair Plan to fully cover the cost of decontaminating and repairing the home.
California Fair Plan has done its best to make smoke seem like it's some other type of loss and not caused by fire.
Yeah, this is what I don't understand, and I don't know how the legalese in these contracts are written, but why isn't smoke damage fire damage? Smoke doesn't just create. It's not like the damage is because someone was ripping bongs in there. The smoke comes from the fires that burned up a whole bunch of Teslas and EV batteries and solar panels that put a whole bunch of toxic chemicals and debris into the air and into these homes. And you got to pay out of your own pocket to fix that? What's the point of insurance?
Any penny that you get out of them, you have to fight tooth and nail for.
Scott Junkworth has already taken the step of suing the Fair Plan for bad faith and breach of contract. He won't even go in his still standing home because in his suit, he says inside there are heavy metals, lead, and cyanide. So the Christmas tree is still up and Santa is still on the mantle.
That is just awful.
When you walk down Scott Street today, everything looks pristine. I mean, there's no ash here, no charring, no signs the Palisades fire burned so nearby. And when you look at his home, it looks like from the outside, it's in perfect shape.
I mean, there have been homeowners, we've heard these stories, where you almost felt better off. The people that were blessed that their homes did not burn down, they're having a harder time being made whole than the people who did. And even those people, including, you all remember, Karen Bass kept doing press conferences in front of the one house on this one block of the Palisades that was rebuilding. And she was saying, see, look at this. We're doing great. Everyone's rebuilding and we're coming together. It's wonderful. And then the local news interviewed the homeowner who said, oh, this is as far as we can get, a couple of studs, because State Farm won't pay out our claim.
It's not a namsy-pamsy thing.
But he says it's so contaminated, it needs to be torn down all the way down to the studs.
They offered us about, I think, less than $10,000 to make necessary repairs. It's insufficient.
It is the worst malice by an insurance company that I've seen in my 20-year career.
Dylan Schaefer represents the Jungworth family, and he says hundreds of others in the burn zones who have smoke damage not being covered by their fire policy with the Fair Plan.
Like, what are we waiting for? What else is the Fair Plan doing that they have not been able to make these people whole, unless that's the whole plan? Because remember, another thing that Ricardo Lara did for the Fair Plan was the way that this system worked out was the risk that the insurance companies had if they were going to not write policies and put people on the Fair Plan was that if the Fair Plan goes bankrupt, it's the insurance companies that have to bail it out because it is their consortium. Ricardo Lara, in his policies that were supposed to fix the insurance industry, 2 weeks before these fires, changed that rule to say that if the Fair Plan goes belly up, which it did, the insurance companies can pass on those costs to all their ratepayers.
I'm very kind of sketchy.
The damage was not caused by smoke. The damage was caused by fire. Smoke is a component of fire.
But until the fair plan fully agrees with that, many who thought they're the lucky ones with 4 walls and a roof still intact still are out of their homes.
It's still very difficult because I know I can't just go and crawl into my bed, you know? I feel like...
Can you imagine how it's been almost a year. 3/4 of the year is over, and there are still people who are fighting with their insurance companies over this. That is so unacceptable. And this is where I don't understand why we have a Department of Insurance. What is Ricardo Lara's job besides going to safaris in South Africa on your dime? Why isn't he and his team and his department with its $1 million budget, and I'm sure it's more than that, why aren't they, with every single individual claim of this catastrophe, holding the insurer's feet to the fire? As much as people want to say that the insurance market in California is overregulated, sure doesn't seem that way to me when you have insurance companies like the Fair Plan, like State Farm, still refusing to pay out claims of the biggest disaster that we've ever seen in Southern California.
I feel like sometimes the little girl comes out of me where it's like, I just want to go to my room. I want to be in my bed. I want to have, my dogs cuddle up next to me, but it's not something that I can do.
Now, of course, we did also reach out to the Fair Plan. A spokesperson told us it cannot comment on individual claims, but we were sent this statement saying, in part, the Fair Plan has been working with the California Department of Insurance over the past year to update and clarify its policy language.
That doesn't mean they're going to start paying people out
around smoke damage. So the language does reflect the manner in which these claims are being adjusted. Our goal is and continues to be to provide reasonable coverage. So, Mark and Michelle,
they provide bare bones coverage, and they're trying to fight like hell to say that they don't need to cover smoke damage.
Reasonable coverage. So, Mark and Michelle, that's the comment from the Fair Plan.
This is not your first story about the Fair Plan. We were here yesterday talking about this as well. That seems like the pressure is mounting. Who else is going after them, or at least putting pressure on them?
Yeah, well, Mark, just a few weeks ago, Governor Gavin Newsom sent a letter to the Fair Plan saying it's unfair how it's handling these smoke claims. And that came...
Gavin Newsom sent a strongly worded letter. Maybe instead of campaigning up and down the state and around the country for Prop 50, you should be focusing on this. You should be spending a lot of your time and energy and the bully pulpit on this. Where's the Gavin Newsom press conference with fire victims going after these insurance companies, going after the insurance commissioner? Can't do that.
After a judge here in L.A. County ruled that it is breaking state law with how the Fair Plan is following and adjusting these claims.
And that's right. I remember that. The Fair Plan has already lost in court that the plans they were writing that they say means that we don't cover smoke damage are illegal. But apparently that doesn't matter either.
And we did reach out again to the Department of Insurance. They told us they have more than 100 complaints just against the Fair Plan.
Wow. All right. Kevin Ozebek, thank you.
Thank you.
And where's the insurance commissioner? Bermuda? Bahama? Kokomo? Who knows? And of course, this is all happening at the same time as the Fair Plan, which is screwing over so many homeowners that lost everything in the Palisades, Malibu, and in Altadena, says that they need a massive rate hike in the spring. I don't know how the concept of insurance survives past the next couple of years. And if the insurance gets so expensive in this state that people cannot afford a mortgage and people cannot afford homes, I don't know what's going to happen. But what's going on right now sure as hell isn't working. And the people that are supposed to be regulating this madness,
I'm very kind of sketchy,
are out to lunch. It's the John Phillips Show. It's Randy Wang here. Let's open up the phones right now. If you are on the California Fair Plan, whether you're in Southern California or Northern California, how do you feel about the Fair Plan wanting to jack up your rates 55% starting in April. Can you afford that kind of a rate hike, what you're already paying on the California Fair Plan? Tell us about dealing with the Fair Plan. Give us a call right now. 800-222-5222, 1-800-222-5222. If you're on the California Fair Plan, call us now and tell us how you feel about them wanting a rate hike between 40 and 55% to half of all policyholders. 800-222-5222, nearly 9 months after the devastating wildfires that destroyed the Pacific Palisades, Malibu, and Altadena. Insurers like State Farm and especially the California Fair Plan are still not honoring contracts, are trying to claim that they don't have to pay for smoke damage. At the same time, they just filed for a rate hike that could raise your rates if you're stuck on the Fair Plan by an average of 35% starting in April. If you're on the Fair Plan, tell me how you feel about this. 800-222-5222. 1-800-222-5222. Let's start with Armando in L.A. Armando, hello.
Hey, Randy, how you doing? Glad to see you're on the air and you're doing well. You should take over this spot. Anyway, no, I'm not.
I'm already on this spot.
Take this hour. It's a great time, and you're answering. You're talking to people. You get calls every day. I know you'd be on that show doing that. But anyway, the Fair Plan, I'm not on it yet because I have, my standard insurance for many years. If I decide to move and buy another house, it might be because I may not be able to get insurance. The other thing I want to say, here's the deal. If you read your insurance policy, it'll tell you what you're covered for. You're not covered for smoke damage, then it's not on your policy. You're not covered for fallen trees by nature. Okay, even the earthquake, California Earthquake Authority, read it. Look at what your deductible is today, and then think, how many earthquakes have we been through where the damage is minimal? And your deductible is, you can't even claim on it because your deductible is so high.
Oh, yeah. If unless you have $25,000 worth of damage, good luck even trying to use that. That's what was explained to me when I was buying my house, and I was like, is there really even a point of having this?
Mine is $49,000, okay, deductible. The last earthquakes we had in the last 25 years, my minimum damage is about, $700-800. $1,500, cracks in the ceiling, windows, doors don't shut right, this and that. It comes out of your pocket. That you're just paying for that policy. But it's, something that when you buy insurance, you have to read the clauses. It's like burglary. You're not covered for expensive stuff. You're covered for standard stuff, not high-end jewelry or anything like that. If you have a Rolex or you have a couple ounces of gold or whatever, you're not covered unless you have that extended coverage. There's a lot of things you have to read on your policy. Look at it today. Read everything. Make sure you're covered. If you're not, spend a few more bucks and get covered. Because in this case, the smoke damage for these people, I would go just clean up the house. Get on with life. If there's a lawsuit coming along the way and you made your claim, you'll get that money then. Or maybe, you'll have to get a little less. They'll probably prorate it, whatever. But at least you have a claimant.
No, it's a good point. It's a really good point, Armando. But, there are some people out there that they can't afford to go out of pocket to rebuild. And some people, these homes, even though it's just smoke damage, it can be total loss. We had one homeowner in that story has to strip the home down to the studs because of how dangerous everything that's in there. And some people can't afford to go out of pocket, and that's the whole point of insurance. But it seems that the whole thing is to have an insurance policy so you can have a mortgage, but good luck actually using it. Let's go to Mike in San Jose. Mike, hello. Mike. Mike going once. Mike going twice. Mike, call us back later. Let's go to Dan in Glenwood. Dan, hello.
Yeah, I used to be on California Fair Plan. They sent me a notice. You're going to be getting a little thing here or there, a raise. Never sent me the bill. I was a day late because I knew it was my renewal. They wouldn't renew because I was a day late, even though they never sent me the bill. But the problem with insurance in California, just like our health coverage, is the government puts all sorts of rules in other places don't do. So a lot of insurance companies say we're not going to write policies here because it's not worth it. If you don't allow us to say you got to trim your trees around your house, we're not going to cover it. It's like covering a drunk driver. But the stupid thing is what we're spending on this proposition right now. We could buy 7 super scoopers. They're $30 million each. If we'd have the super scoopers like we should have 25 years ago, we never would have had these fires, or they wouldn't have been as extensive. This governor is an imbecile, and he should have had a ton of those super scoopers, and we wouldn't have this problem.
Well, and for all the money that these things have cost over the years, especially when you look at the fires that were directly caused by our utility companies, how much would it have cost less if we just spent the money up front and undergrounded the power lines?
Well, that is a tremendous cost to do that because you're also crossing gas lines and all sorts of other stuff. That is not an easy thing to underground utilities. It's extremely expensive.
I would argue it's worth it, but thanks so much for the call, Dan. Appreciate it. And I do understand, the thought of, other states don't have these problems because, the insurers aren't to the point where they have these rate approvals. They can charge whatever they want. Well, that's true. But be careful what you wish for, because what's happening on the other side of the country in Florida might be just as bad as what's going on here, where because of modeling and the fact that Florida is going to flood constantly over and over and over again, insurance, especially for condos, has gotten so expensive that people cannot afford their mortgages because their rates have tripled, gone up 5 times. And the problem that we're seeing is there are a lot of condo owners in Florida that cannot afford their mortgage because of the insurance, and they also can't find anyone to buy their condo. Some of them are selling them at a loss. Some of them are sitting on the market for over 100 days. I don't know what the answer is, but allowing the insurers to charge whatever they want in other states doesn't necessarily mean that we're going to be out of this. And you want to talk about insurers dropping you for nonsense? Texas doesn't have a whole lot of regulations on insurance companies. And you know what's a story that I flagged? In Texas, they're sending non-renewals to homeowners because of hail risk. How exactly do you mitigate hail risk? If you've ever been in Texas, it hails a lot, and the hail is as big as snowballs, but what exactly are you supposed to do about that? Let's go to Mark in San Francisco. Mark, hello.
Hey, how you doing? I'm really glad to hear that somebody is talking about this because I don't hear it talked about very much in the mainstream media. I heard you talk about and undergrounding, and that is absolutely, they would have saved so much money if they'd done it a long time ago. And Bangkok, if they can do it in Bangkok, Thailand, I think we could do it in the Bay Area. My insurance went from about $2,000 a year up to over $8,000 just for the FAIR plan. Then I got another $2,500 policy, which covers water damage and things that the FAIR plan doesn't. And at that, I'm, if I have a total loss, I'm $300,000. They wouldn't insure it higher than where I have it. And it's scary to hear them say that there could be a 30% increase. Newsom is at fault. And the problem is California is the 5th largest economy in the world. And if you can't get insurance, you're not going to get a mortgage. And you're not going to be able to sell a home. You're not going to be able to buy a home. And it could freeze one of the biggest economic powers in the world, which is the California real estate market. And, like you said, in Florida, they're having similar issues, too, all over the country. So I think it's whether you like them or hate them, I think the federal government, I think Trump needs to step in and pull all these companies together in a room and say, what the hell's going on here? We need to straighten this thing out.
Oh, I think there definitely needs to be a big federal response on this because this isn't just happening in California. It's very pronounced here, but there's an insurance crisis in a lot of states right now, including states that don't have some of the nonsense that California does. And if we're really at a point, and it's a difficult conversation to have, if we are at a point where the insurance companies are being upfront and saying, we can no longer make money, so we cannot do business, what do we do then? What happens to the concept of insurance? Does it have to become that the government is the one that has to provide that and they know they're taking it at a loss? Because if we go down the road of, like you said, where home ownership becomes impossible and you cannot even sell your home to get out, that is going to crash property values and is going to crash the state.
Right, absolutely. Where it's a scary idea that I don't know how California Fair Plan isn't making a profit when they're charging me 3 times what State Farm or Allstate, all these other insurance companies were charging. I don't quite understand it. It's got to be some type of mismanagement of funds somehow. I think there needs to be a big audit as well, some type of independent audit on California Fair Plan.
Oh, I think you're totally right about that. Thank you so much for the call, Mark. Appreciate it. And the Fair Plan act's very secretive. We don't get to see who's on the board of directors. We don't get to see their meetings, unlike other publicly traded companies, because this is a consortium of the insurance companies. It's very secretive. We don't get to see their books. And you would assume the insurance commissioner gets to see their books when he approves a rate hike like this. But I don't know. I mean, State Farm, sure, they could argue that they're losing a bunch of money in California, but their parent company, State Farm National, has had record profits to the point where they can pay for the naming rights to all these stadiums. But again, I'm not here to say I know what the answer is. If I did know what the answer was, I'd be in some kind of elected office or running some kind of think tank. But I really don't know how this concept of insurance goes forward. 800-222-KABC. Excuse me. 800-222-5222 is the telephone number. 1-800-222-5222. Our Bay Area listeners just found out that 800-222-5222 is also 800-222-KABC. Let's go to George in Antica. George, hello.
Hello, yes. I don't know where to begin, but I agree with all the previous callers. The one-day thing, if I'm late one day, they're going to cancel me. But just a quick story about insurance. So I have a family vacation home up in the foothills. And within the first 6 months after buying it in 2009, the house was hit with a lightning. And my insurance was very good. It was $18,000 worth of damage. I only paid $500 deductible. I am now paying 3 times what I paid back then for fire insurance only on this home, and I still need the other coverage from my first insurance company.
It's wild. And you think about how many homeowners never, ever, ever, ever file a claim, are paying these premiums for years and years and years and years, and the insurance companies still say, no, it's not enough. We're still broke.
Yeah, I'm about ready to just drop it and take my chances, because it's so ridiculous. I'm about ready to leave California, too, because of some of this stuff.
Well, and you can definitely make an argument. There's a lot of homeowners in the Central Valley that are doing that. If you own your home outright, you don't need to have home insurance. And you could theoretically put all that money that you would have put towards premiums towards a trust that you can just borrow from if you have damage to your house.
Yeah, I'm retired. So this place that I did buy is paid off. So I don't need the insurance necessarily. But as retirement goes on, I don't know if I can afford both homes. I'm going to have to do something.
Yeah, I feel it's getting really tough, and it doesn't look like it's going to get any easier anytime soon. George, thank you so much for the call. Appreciate it. 800-222-5222 is the telephone number. 1-800-222-5222. The California Fair Plan, which is still not following through with their contracts in the Palisades and Altadena and Malibu, is asking for a rate hike that would increase insurance rates for people who are stuck on the FAIR plan by an average of 35%. If you're on the FAIR plan and you want to react to that, you want to tell me your experience with insurance in California, give us a call right now, 800-222-5222. 1-800-222-5222. More of your calls coming up next. The FAIR plan has asked for a rate hike that could jack up rates for people stuck on the FAIR plan, the insurer of last resort, by an average of 35% starting next April. Let's go to Sean in Carlsbad. Sean, hello.
Hey now. Hey, I just wanted to throw in my 2 cents, which basically that California has hamstrung itself for auto insurance and homeowners insurance. For car insurance, they've eliminated credit as one of the underwriting factors. And for homeowners insurance, it has been greatly minimized. It's statistically proven that people with bad credit have more claims. And by taking that away, taking that out of the factoring process, everybody, including responsible people, are paying a larger share than they should be.
I didn't know that. That's fascinating, and that doesn't make any sense because, yes, if you have bad credit, that means that you should have to pay more for a loan, and you should probably have to pay more for insurance as well. But that does sound like a nonsensical California policy. Thanks so much for the call. Appreciate it. Let's go to Ted in San Clemente. Ted, hello.
Hello, Randy.
Hey.
Hello?
Howdy.
Yeah, Randy. Oh, I just went under a bridge. Excuse me. I think it's a lot of it is basic economics. I don't know how you drive, but if you're a good driver, you get better rates for your automobile insurance. This state is run by a combination of corruption and incompetence. If we list all the losses of housing, by fire, flood, earthquake, whatever, and we establish what we need to mitigate those problems and run the state properly and cleanly, we will have less risk. Then the insurance companies can make money.
I think that's something that we should be investing on, and that's what we should be spending all of our money on.
Yes, exactly. So the combination, and I've been in construction over 50 years, that underground is very efficient, but it's best done when you're first building. When you do it later, it can be a can of worms. So that other caller that mentioned the cost, believe me, it can get really expensive. It can be clean in some areas, but a lot of areas very, very expensive and sometimes almost impossible. So anyway, that's the way I would look at it. And we need a government, instead of the worst government in the country, we need a good government that actually is practical and rational.
Oh, yeah. We need a government that wants to talk about this issue instead of just kicking it all to a corrupt official like Ricardo Lara. Thanks so much for the call, Ted. I really appreciate it. Let's go to JR in Brentwood. JR, hello.
Yes, hello. How are you doing this nice day?
Doing great.
Fantastic. Let me just get you a quick background. I'm in the entertainment industry. I got a production company that's a startup, and it's going straight to the sky. And I know several thousand celebrities. We did the Hollywood meet and greets type of celebrity shows. Okay, I also am ex-military police associated with the agencies. Okay, now, first thing I would suggest is the insurance company is pulling shit that they should have been.
You can't say that on the air, JR. Sorry. Thanks so much for the call. Appreciate it. Let's go to Jim in Santa Rosa. Jim, hello.
Hey, good afternoon. Thank you for taking my call. Just real quickly, I'm one of the 5,000 who lost their house in the Tubbs fire here in Santa Rosa in 2017. My insurance through civil service employees was about $2,500 a year for 30 years. Now it is $7,500. $5,500 of that is FAIR Plan. It's just like you said. I appreciate you exposing this issue. I have no idea how to approach it as far as risk. I have retired fellow baby boomer CAL FIRE clients who state that they used to in the day cut fire trails every winter, work with PG&E to do burns, make things safe, and that was stopped decades ago. So
yeah, those are the kind of things we really need to start looking at. And right now, our current government doesn't seem to be caring about that. Thanks so much for the call. We got one more hour to go. It's the John Phillips Show on this Jimmy Buffett Friday. It's Randy Wang here. See you in a bit.